Welcome back to Dollars and Senseless with Adam Smith. I'm your host, Adam Smith. And again, we talk to so many different people about their walks of life and their personal finance journeys. I've got Jarod Alexander here today. He's not only the founder of Optimal Equity Group and the host of the Optimal Wealth podcast, but he's also passionate about empowering investors to thrive in the realm of real estate. With a mission to educate and guide individuals towards achieving robust returns, Jarod brings a wealth of experience and insight to the table. Renowned for his exceptional salesmanship, Jarod has garnered numerous accolades throughout his career, a testament to his unwavering commitment to personal satisfaction. Beyond his professional endeavors, Jarod is a devoted family man, finding joy and fulfillment in his role as a husband and a father of 2 children in the vibrant city of Phoenix, Arizona. Welcome to Dollars and Senseless, Jarod.
Adam, thanks for having me. I'm excited to be here.
Yeah, I'm glad to get you on here. So, reading through your bio, it's crazy to sit here and think about, the journeys that people take, and yours is no exception. I love to get you to kind of just talk a little bit about your background, where you started and how it brought you to the Optimal Equity Group.
Yeah, absolutely. So, for me, kind of going back a little bit, I always knew from a young age. So I actually go back to when I was a kid. I remember when I was probably 10 or 12 years old, I was riding on a tractor with my grandpa, and, he was developing these buildings on his property he owned. And at the time, I was just thinking it was cool to, ride on a tractor. But eventually, as I grew older, I learned that, he bought a piece of land. He actually owned his business, owned the building there, but he developed more land. And essentially I saw him retire at the age of 50 years old. And that always intrigued me. I'm like, wow, he moved out here to Phoenix, Arizona, which is where I'm currently at right now. And, so I always had that little bug in me. But then, I went through school and they teach you, hey, get a job, retire, put money in a 401k, retire at the age of 60, 65. Hopefully you got enough to live off of for the rest of your, retirement there. And so that was kind of my mindset. Even though my grandpa was an entrepreneur, he actually passed the business down to my mom. And so I come from that line, and they owned a little bit of real estate, or my mom did. And of course my grandpa owned the commercial, but they never really taught me anything about real estate. So I kind of had an idea, maybe I'll own a business. Maybe I'll own a flooring company, which is the company they owned one day. And so I started working in there and started, doing really well. I started out in installation, then I went to sales, and I figured out in sales, hey, you can make a lot of money, right? And so I went down that path, and I went right out of high school into the business world. And, what I learned is for what the quick money I can make, but I, eventually got introduced to a book called Rich Dad, Poor Dad. And that totally opened a whole new world up to me. I had no idea, I can take control of my financial future. I don't have to work until I'm 60. I can start creating this, what they call passive income or horizontal income to, supplement my day-to-day, my expenses. Right. So my goal is to be work optional. I, want to, and we're going to get into this, I'm sure, a little bit later here, Adam, but my goal is to create enough passive income where I can be financially free. And like you mentioned in the bio, I got a wife and 2 beautiful kids that I want to be present for. I want to spend as much time as possible as I can. And so I found a vehicle and a way to invest in these alternative assets, real estate, apartment syndications, different things like that, to be able to help me hit my passive income number to be, again, work optional, financially free. Now I'm the type that I'm never going to never going to not work just because that's just not me. I can barely sit still on a weekend. My wife is like, hey, just sit down and watch this show. And I'm like, all right. Yeah. Like I have to force myself to sit down without doing other things. So I'm definitely always on the go, but I love learning in the personal growth, in the investment world. And, this is just my passion.
No, I mean, that's great. I love hearing about how, you see things from your family, passing the bug down basically into the system and getting everybody to understand potentially what could happen if you don't just look at, a particular job, but also look at other types of investments. So you started out, in flooring, they got into sales, and I'm sure just from like a customer satisfaction standpoint, as I was talking about earlier, it's just continuing to see those things. I think you decided that you wanted to do something that continued to educate, to provide a little bit more customer satisfaction. And I know that kind of brought you to the Optimal Equity Group. So if you want to talk a little bit about what that does.
Yeah, definitely. And I guess, I will rewind a little bit too. And so whenever I started getting a real estate bug, like I probably, like a lot of us, Adam, started out single family, right? My goal was to buy probably 60 houses, cash flowing around $200 a month to get to my number I wanted to be at. And then I did one and realized after 3 weeks, I had a big repair, about $4,000. In Kansas City, Missouri, they have sump pumps, which I didn't even think about, right? And so anyways, after that $4,000 repair, I'm like, that wiped my cash flow out for 2 years. So, and granted, it's real estate, it built equity. I ended up making probably $12,000 to $15,000 on that one investment. I mean, it was a $75,000 house, so I had a pretty good ROI. We sold it just over a year later. But my goal was to create horizontal income, right? Because I'm still active in my W-2, been in sales, right? So I'm fortunate to make some pretty good money there that I can, invest in the real estate. But I wanted to scale, right? And so then I started getting introduced to the world of multifamily and apartment syndications, which I had no idea about these alternative investments. Again, I grew up 401k, stocks, bonds, mutual funds, right? The things everybody talks about. They don't talk about apartment syndications and these alternative ways to invest. So I started educating myself around that, podcasts, books, networking events, anything I could, which led me into meeting my first, the first operator I invested with, actually here local in the Valley, Rise 48. And so I did a handful of investments with them. And what I found in that first investment, Adam, is I invested a similar amount as the down payment I put on that multifamily or that single family house. And I was completely hands off, right? So I was still getting a similar distribution check month to month, a little less, but I didn't have to worry about dealing with the property management, worry about repairs coming out of my pocket. Right. I had to know it, and I still got to participate in the tax advantages, the depreciation, right? All the lovely things about real estate there. And so that really opened my eyes, like, wow, right? Not a lot of people know about this. And then I quickly did. I mean, I'm in a total of 6 syndications now personally. And so going back to your question of Optimal Equity Group and how that started is I wanted to help educate others on how to get involved in these type of real estate investments. And because, again, not a lot of people know about it in sales. Again, I'm working with peers that are making pretty good money. And I'm like, hey, if I can show you, hey, how you can create generational wealth for your family, then absolutely, I'd love to do that. So that's where Optimal Equity Group was born. And again, like you mentioned in the bio, my passion is just to really help educate others on how they can achieve financial freedom through real estate and just take control of their futures. And not saying they're just going to, retire on a beach in 10 years and drink Mai Tais all day, which, hey, they could probably have that option, but just to be work optional, right? Just to have that option. You want to take a vacation with your family, I really think it's important, and what was important for me is to figure out my why, right? What's my why and my reason to do this? And I actually got a personal mindset coach and really kind of helped determine my goals, my outlook, where I'm going, and I got a little frame on my wall here, and just with a bunch of sayings, some stuff I want to achieve. And one of the sayings is, hey, do you want a life that's easy or a life that's worthwhile? Right. And I want a life that's worthwhile. And it takes work to do that, but the rewards, are unspeakable. Right. So
yeah. I mean, that's awesome. Is it easy, or is life worthwhile? I mean, that's great. That's what I think about for myself. You were saying, you started with, getting into single families, and then that's what, you thought, okay, I just need to get, this many, and then that will then cover me for, my cash flow for my job. I can step away from my job and do that. But once you got in there, you took action, you started to learn a few things, and then that just led you on a continued path for those ideas. Okay, what else could potentially work that would also hit my goals, but make it so I'm not as active in there. And so you're switching over into the syndication deals and being a limited partner, I'm assuming, in those syndication deals. Being doing what you said, taking a small chunk that you would have put into a single family and moving it over to this other investment, and allowing somebody that you trust, that you are working with, they've apparently done well enough that you've done six different deals for them. But going to the standpoint of, I want my life to be fulfilling. I want it to be worthwhile, and I don't want it to be just about work. I want it to be about other things, and finding that why, I think, is a major factor for a lot of people that I'm running across, and including you. I know we met at a networking event, and just kind of talking to a number of people there, sharing very similar whys in there. Getting to the point of wanting to be financially independent, be financially free, but that didn't mean that you're just going to stop working at the same time. So I think that's great that you're finding, what works for you. So great. I'm happy that you're finding this, and I'm glad that you've now taken what you've learned and now are helping to teach others through the Optimal Equity group.
Yeah, absolutely. And it's been just fun to do. And I want to touch on a couple things you said there. And one of the words that stuck out to me is you talked about being fulfilled, right? And one of my words this year is fulfillment. And because it's so, happy is an emotion, right? Success, yeah, that's great. But, there's always another goal. There's always some, okay, I reached this goal, and now I want to do this, right? I'm always moving the bar on that success, but that fulfillment, I want to bring that into all areas of my life, so I want to be, for me, it's important. I want to be the dad I never had, right? I want to be a good father to my kids, be present in their lives, right? I want to be a great husband. I want to take care of my physical health, my, financially, definitely, be emotionally stable, like all these things, right? I think, go into what I'm doing on a day to day and really help impact my, my professional life and my financial career path as well, because all this stuff ties in together. When you feel good, you do good, right? Mm-hmm. And so, I wanted to touch on that, and then I'm glad you clarified being an LP too on the in a syndication. So LP is limited partner, right? So that means I'm just I'm an investor and own a small percentage of the syndication that I'm investing in. And so for those that don't know, a syndication is where investors pool money together Typically operators raising money for the down payment, renovation costs. We primarily focus on multifamily value add. So, they raise the money, renovate the units, and then the investors get to participate in the equity in the property when the deal sells. So typically 3 to 5 years, you can double your money, get some cash flow throughout the hold period. So that's typically what we're doing. And now I have done, and I am a co-GP in 2 deals as well, which means, I have an active partnership, more of an active role in the partnership on 2 deals in Houston and Dallas. So, but again, when you're getting into this space, just really determine that why, right? Like Adam was talking about, it's so important to, why am I doing what I'm doing, and having a plan and having a goal. I know this, Adam talks a lot about, what do your finances look like? What are your personal finances? What are your goals in that realm? And I think it's, really determine your why, your goals, and then set up a plan to achieve that, and you'll hear a lot of people talk about start with the end in mind, right? Mm-hmm. Start with the end in mind and you work backwards, and for me, and we're going to get into this a little later in the podcast, but, mine's, hey, I want to create that $20,000 a month, right? And passive horizontal income, and thankfully right now I am still in the W-2. So I have that cash flow. It's important to see what type of investor you are. Are you a cash flow investor or a growth investor, right? For me, I'm a growth investor. I'm trying to build my net worth. I have cash flow coming in from my W-2. So I'm trying to deploy all that, put it in these equity deals, like these multifamily value adds, where I can, participate in the upside of the property when it sells, right? Some people are looking, hey, they got $1 million sitting in the bank. They want to get 8 to 10% on their money. Hey, that's probably more of a cash flow, right? So just important to determine what type of investor you are. And yeah, again, I just love sitting down, getting on the phone with people and just having these conversations. And thank God for your podcast, Adam, because my wife loves it when I come in here because I don't have to talk in her ear about all this. So
hey, my wife thinks the exact same thing. You were talking about, trying to find deals and, to build to build to that $20,000, you're talking about, being a GP, a general partner, or an LP. And, one of the big things getting into those types of deals is really looking at the operator and trying to get a good sense of what they're doing. So I'm kind of curious, what did you do as far as vetting your operators? You don't have to talk specifically about the ones that you're working with, but just, how do you vet your operators?
Yeah, that's a great question. So, they talk about the know, like, and trust, right? And so, know them. So really, I had a buddy that was a little bit ahead of me in this space. That is a mentor actually to this day. And, he gave me a referral to this operator that he invested with. So I jumped on the phone, and honestly, Adam, I'm just learning about apartment syndications, scratching the surface on this. So I went on Google and said, hey, what do you ask a apartment syndicator, right, when looking to invest in their deal? And 20, 30 questions came up. And then I guess the highlight, probably maybe 3 to 5 of those, is, for one, hey, what's your track record, right? I think that's really important. Has any deal gone full cycle, which means they bought an asset and sold it and returned investor capital, right? I think that's important. What's something that you projected on that didn't go as planned? How did they overcome challenges throughout that deal? What's their communication like? And a lot of times you can get that right from the start. So if somebody's, if you, follow up with an email and it takes them, 3 to 5 days to get back to you, that's not great communication for me. Like, I want something like, man, there's the guy I'm invested with, actually Rise 48. I don't mind giving him a shout out, Zach. I mean, he gets back sometimes 10 o'clock at night. Now, I'm not saying he always does that, but the communication is great, and so, definitely looking at those are probably some key metrics there. Do a background check. I mean, these are people that, that you're wiring $50,000 over to, make sure they're going to be a good steward of your money, right? And so when I had that first conversation with Zach, and I kind of went through that process, I felt comfortable. Okay. And, and I had a friend that did it, and I saw their track record as well. And, and today they're one of the largest syndicators here in Arizona. And they actually just moved to Dallas as well. So they've done over, 49 transactions. And so now that I've got that experience, that's where, okay, hey, I can feel comfortable partnering with them and bringing other investors to that deal. Because I personally have vetted these deals myself, right? I have a good, probably, 60% of my portfolio with this one operator, right? And so maybe not that much, but anyways, a good percentage of it. So it's, but it's going back to that know, like, and trust, right? Whenever I develop that trust with somebody, like, I don't even have to necessarily analyze the deals as much. Now I still do, right? But I think that trust factor is huge, right? And the track record are the most two important things there, Adam. Yeah.
No, that's, the due diligence piece. I think that's huge in any deal, but especially in a deal where you're not the one running it. I mean, you've got to know, like, and trust those individuals so that you can continue to do it. And I think it's even smart, in some of these deals, and I don't know what you did as far as, dipping your toe in the water, but with 6 different deals, it tells me that you first did your first one, you did your due diligence up front, you talked to different folks, you got on Google and figured out what questions you needed to ask, and then as those deals have matured, that means you've and invested in other ones, you've felt comfortable with those individuals, and you continue to do more and more with them. And even, I know you said you did, 60% of your portfolio is with them, but that's 6 different deals. So it's not necessarily just one deal that you got 60% in. You're looking at 6 different deals, and I'm sure they're spread out between Arizona, and now they're going into Texas. Yeah. So it's, finding good people, deciding what you want to do, how involved do you want to be, how passive does the investment need to be, and then finding ways to diversify inside of those areas without having to jump to, multifamily, to crypto, to, oil and gas, to, wherever else, until you feel comfortable in those spaces. Then you can start to branch out as you go forward, continuing that, as you were talking about, that horizontal approach.
Yeah. And, and I want to touch on something real quick, because for me, I was early on, before I even bought that single family, I was in that, what they call analysis paralysis stage, right? Like, I was trying to educate, and there's so much content out there now between podcasts. I mean, I was big on Bigger Pockets, steadily listen to that. And then of course I came across some others as I branched out. But the biggest thing for me was taking that action. And once I bought that single family, that just got me over that threshold, got me over that scary threshold of like, okay, hey, I've done this. I'm a real estate investor now, right? And whatever that is, fill in a blank on the asset class or whatever. But all right, I'm an investor now. And it made that, these other deals a little bit easier to put my money into these, now don't get me wrong. I mean, wiring $25,000-$50,000 was, it's nerve wracking, but, but, again, once it's done, once I get distribution checks, I can breathe a little bit. I'm like, okay, hey, this is legit. This is, I'm getting some income here. It's real estate, it's, you can see it, touch it, drive by it if you're in, if you live in the market you're investing in. And so those are, definitely some things, but I just wanted to touch on, once I got that foot across the threshold, once I started taking action, right now, educated action, like definitely educate yourself. Don't just go in blindly and throw $50,000 into something you have no idea. But once I got to a point where I felt comfortable enough, and honestly, even saying that, I still don't feel like I was at that point. I just had to learn as much as I could, take action. And by taking action, that's when I've learned the most, is just that process along, just like the single family. You can read as many books as you want, but somebody talks about, these just things that come out of nowhere and getting calls at 12 o'clock at night from the property manager, which is supposed to be passive, right? Like, you don't know until you experience it. So that was a game changer for me getting in. So.
Yeah, I know. Taking action, I think, is a big thing. I think taking smart risks, I think, is a big key for myself. Getting yourself educated, but then taking action, figuring out that you're going to make mistakes along the way, because you only are going to grow if you tear something. I mean, you go in and go to the gym, you're going to tear muscle when you do weightlifting. It's just, that's part of, but you grow stronger as you do that. And as you start small, you start out, get the form right, you will continue to grow and grow and grow the more you get into it and the more consistent you are with it. And so that, what you're talking about as far as getting into single family, it started the process. It got you to understand what you were potentially looking for, knowing that, okay, I need to get to $20,000, which we're going to talk about here in a second. But to get to there, what do I need to do to get to there? And you saw, okay, single family necessarily wasn't what you wanted to do, going into multifamily and going, okay, well, I don't necessarily need to be the general partner or the operator in this. I can find good people to be those people. And then, so I can be a little bit more passive with some of these investments and still reap the benefits of real estate. So, okay, let's dive into this a little bit more. Let's get into the personal side of the finance. You're talking about these investments and everything. When you sat there and started thinking about, how do I manage my finances? How do I become financially free? What kind of started you on that path? I mean, what did you read you're talking about Rich Dad Poor Dad, which I know a lot of people get into. Was that what got you started, or seeing that from others in your life?
Yeah, no, great question, Adam. And yet, Rich Dad Poor Dad opened me up to a new world. But actually, kind of moving back, I was always a saver. Like it's funny, I used to drive my mom crazy because I'd get this money and I'd go buy some clothes, and I'm like, I'm not going to buy the $50, $60 pair of jeans right away. I'm trying to shop for the deals, right? Because I want to hold that money as much as I can, and because I didn't want to get rid of it. So I think that benefited me well. And I saw some debt too in my family, and I just didn't want to do that. So I was kind of always had that saving mentality. But since I moved out here to Arizona, again, got introduced to the Rich Dad Poor Dad, started building a family, right? Then it took on a whole new meaning. It's like, hey, I am the provider for this family. Like, I got to set how are we going to set ourselves up successfully, in the future here? And take care of our kids. You got college, I'm at preschool right now. For 2 kids, paying $25,000 a month or a year, right? And that's somebody's salary right there, right? It gets expensive. So, biggest thing, and then I honestly, for people just getting started out, I think the Dave Ramsey approach is great, right? If you're in debt, if you need to, make sure you build your emergency fund, pay off the debt. They call it the snowball effect, right? Start with the little ones, work up to the big debt. And then, essentially all you have left is your mortgage. Now, from that point, though, that's where, like, what we do in these apartment syndications and stuff is we assume we want the debt, right? So they got the good debt, bad debt, So I think that there's definitely a difference there. Bad debt is, of course, credit card stuff you just don't need, loans for a vehicle that's way too expensive, whatever, right? But the good debt is, okay, hey, I can put $20,000 down, invest in a rental property and start earning some money. So if I'm cash flowing from that, I think that's good debt, right? So anyways, I say all that because I start looking at all these options. And so for me personally, I made sure, okay, my family is going to be taken care of. So I'm not going to invest any money that I can't afford. And that's one of the things I sit down with investors with, because like, as you know, Adam, investing in syndications, it's illiquid, right? I mean, for that 3 to 5 years or plus, that money's going to be tied up in that deal, and I can't go access that money anytime I want. So I need to make sure I'm not investing money I don't need, for one. And so I have my emergency fund, and I'll share some numbers with you. I mean, mine's about $35,000, right, in my emergency fund, where if the AC goes out, if we need to buy a new car, I need a new roof. Our furnace is about 17 years old right now, and God, I'm just hoping it keeps kicking.
Just wait. It'll happen.
It'll happen. And that's what, $15,000, whatever that is. So anyways, but I got my emergency fund. So if these things come up, hey, we're okay. Or, I mean, on my W-2, right, I'm 100% sales, 100% commission-based sales. So if God forbid something happens to me, I break a leg, I'm not able to go see appointments, something like that, I got a backup fund. So anyways, first is having that emergency fund for us. Next thing is, okay, I got my checking account. I put $5,000 to $7,000 in there. Typically, I try not to have too much because I want more going into my investments. But all right, those are the day-to-day bills, right? The stuff coming in and out, my automatic drafts. And then, I actually pay myself a certain percentage of my paycheck. So, and Robert Kiyosaki talks about this, pay yourself first, right? And so me paying myself first, that's an automatic expense that comes out of my account every time. That's automatically set up. I don't have to touch it, and it goes into an investment account, right? And so I have a big percentage of that going into there. And then once that gets to a certain amount, then I'll go deploy that into an investment, whether it's a syndication. I'm actually looking at some note funds right now, some more cash flowing, just diversification, right? I think that's super important. Put it into some different buckets and let it work for you. Have some money in the stock market. I will share, I stopped contributing to my 401ks because, and I don't necessarily recommend that, but it's just a decision I made on what I know now, is that if I can build money and have access to it, right, that I can just keep reinvesting and stuff, and not have to have the government tied up until it's 59 and a half and penalize me if I want to take it out early, right? I actually think through my work 401k, I can take a loan against it, but I can't even access the money the way this is set up, which I think is total BS, right? Because it's my money, And now, granted, it's in a retirement account, but even if I wanted to pay a penalty, I have to check into that. But somebody that tried to said that they couldn't. So anyways, that led me to, all right, hey, I want to be more active. And that's why I like the real estate, the apartment syndications. I mean, stocks, again, I have that diversification, but it's so volatile, right? One tweet can drop a stock, and with real estate, it's brick and mortar. Something happens with the market. We're seeing this right now, Adam, right? With interest rates, the people that have a good business plan that are, had the debt was a huge, how they assume the debt, but it's a brick and mortar asset. It's still there. It's just not poof, gone. Right. So I still have something to attract to that. And that goes back to minimizing risk, right? I want to minimize, risk mitigation as much as possible when I'm looking at these investments. So anyways, those are some things that I do. And then giving back, I'm a big believer in the law of reciprocity. There is just, giving back to others. So donating a percentage of our money to charities or friends. Like when, we had a friend that was going through some rough stuff, so we were able to help them out. And I'm thankful to be in a position to be able to do that today. So yeah, I think, the giving back, and having fun money too, right? I think that's important, right? Having that entertainment bucket where, so the Final Four is March Madness right now, and we're looking at
right there.
I'm a big Tar Heel fan, and I'm born and raised in North Carolina. Adam's shaking his head over here, but But anyways, and I'm in Phoenix, Arizona, so the Final Four is here. So,
Yep.
We might be going to that depending on who's playing. But just having that fun money, right? And as a result of, thankfully, being in a good position, being smart with my money, right? Trying to pay off vehicles. One, I will share, we got a loan on just because, I wanted to deploy more capital into some investments, but I'm paying that off in double time and right now, but it's just, paying as much off as you can, not having that bad debt, and then enjoying it, right? I think this is be a good steward of our money. Money doesn't define who we are, right? Going back to that, what are my goals? What's my why? I want to be fulfilled, and money is just a vehicle to get me there.
Yeah, I mean, what I hear from your story is, personal finance is personal. I continue to push that. You can look at all kinds of different ways. I mean, there's people who take every last cent and they just deploy it into investments, and there's other people that take all their extra money and they put it into fun stuff. I mean, it's really personal at the end of the day. But you decided, you need a cushion. You need something there for things to go wrong. And I think that's huge. I mean, I think the last time I saw it was like 40% of people have less than $1,000 in savings. I mean, that's amazing to me. And so to hear, you're doing things, that Dave Ramsey does preach, and then a lot of others as well. Getting yourself a cushion, something that if things go wrong, here's some money. It's not necessarily even things break, but if you lose a job or something like that. I mean, that's a big thing for me is thinking about, I've got a job, and if you lose that job, then you got to go find something else. Well, what do you do in the interim? What do you do? So I think having that cushion to start with, the emergency fund, and that's just there for emergency. I mean, it just sits there, and then you got your checking account. What do you do from a day to day, month to month expenses.
Yeah.
And then after that, deciding what, where you want to deploy the rest of that, which is whether you go into the investments or head to the Final Four.
Yep.
Yeah.
Yeah. Who's your team?
I'm Kentucky.
Kentucky, okay.
Yeah, unfortunately, it didn't work out well this year, but
they're typically there.
It's a fun time.
Yeah, well, I want to touch on real quick on that, like when you talked about the money in the savings account, is there still ways to earn? Like right now, they got the high yield savings accounts that can earn up right around 5%. So I'm still earning money on that money that's just sitting there, or a money market account, because money market accounts are pretty liquid too. I mean, you can usually have access to the cash within 24 to 48 hours. So, there's definitely different accounts. Even with that emergency fund, you can be making money on. So just making sure. And you don't know until you know, right? Because honestly, before that, I had my money in something that was earning 0.001%, and I'm just like, what am I doing here? Before I got, kind of opened up to this world. So, look, hindsight's 2020, right? Looking back, I'm like, oh my gosh, the money I could have made, knowing what I know now. But I think that's just all part of the process for sure. So, and then being able to, and I want to share this on here, personal finance. Like if you have retirement accounts, self-directed IRAs, if you own a business, get a solo 401k, because you can, contribute, I think almost up to $60,000 a year into that. And then you can deploy that into real estate investments, right? And earn. Now, I'm not a CPA, talk to your CPA and disclaimer there, but my understanding, you can deploy that capital and not pay taxes on it in a solo 401k. Self-directed IRA is a little different, so there's definitely some tax implications there that I've found out after doing it. But even with that, I'm still going to get a better investment, I believe, than if I had that portion in the stock market. So just educate yourselves on all these different ways to take control of your finances and personal finances, like Adam shared. Everybody's got their own story and their own different goals and circumstances, but just make sure it fits yours.
Yeah. circling back from what you said earlier, start with the end in mind. What are you doing this for? Why are you doing it? And then start to look at different parts of your life and take small actions, and those will compound as you go. I mean, you talked about starting with single families, and now you're into multifamily, like large apartment complexes. So I know that doesn't happen overnight, but it does happen if you're consistent with it, if you continue to learn, to take action, and just continue to build in a smart manner, taking smart risks, and figuring out the why at the end of the tunnel. I think that's the biggest thing. So
yeah, absolutely. If you do a 10-year outlooks, and let's just use like apartment syndications for an example, and talking about the compound interest, right? Take $50,000, right? And then say it doubles in 5 years, right? Okay, year 6, you're getting $100,000, right? Year 7, I mean, like that, and then you're still reinvesting that capital. I mean, in 10 years, just on a $50,000 investment per year, you can create $1 million right there, right? Just on redeploying that money and that compound effect, right? 2 and 4, 4 to 8. Then you take that $1 million and invest it into cash flowing assets, right? You get something that's 10%, you're making $100,000 a year, right? Mm-hmm. Like that's the power of this. And then that's not even including your active money. That's just passive income right there. Mm-hmm. I mean, these are how exciting, they talk about, and Adam's talking, building generational wealth, right? Like that's what we're doing here.
Yeah. Jarod, I appreciate you coming on here and telling your story. I love, the idea that, you're looking at other avenues to build your wealth. I mean, you're started with, parts of your life and seeing that, family members got the bug into you, get it into the system, and then continuing to build on that. And then hopefully that will continue to build for your own family's generational wealth and continue to do that. So again, thank you for coming on to Dollars and Senseless.
Yeah, no, absolutely, Adam. I really enjoyed our conversation today. And and if anybody wants to connect, feel free to go to my website, set up a call at www.optimalequitygroup.com. We got a free checklist for the due diligence we were talking about there on investors or what investors can ask questions to operators. But Adam, I enjoyed it. I really did. And get a network, right? Like you're listening to, like get around like-minded people. That was the biggest difference for me. So,
yeah. Well, anybody who's listening to this or watching this on YouTube, go ahead, like, subscribe, comment on this, and then go and see the Optimal Wealth podcast with Jarod and see what all he gets to talk about, because he's got all kinds of fun things. So again,
we got a great guest coming on the show here pretty soon too, by the name of Adam here. So yeah.
Looking forward to it. All right, Jarod, take it easy and have a great day.
Hey, thanks, Adam. You too, man.